Now, a country that has been grappling to get its footing economically for some time, Sudan, has indefinitely suspended use of a mechanism that sets the daily exchange rate of the Sudanese pound against the dollar. The central bank in October had announced the introduction of the mechanism for the exchange rate setting on a daily basis through a new body of bankers and exchange bureaus. The move, which allowed for a sharp devaluation of the local currency, was part of a package of measures designed to tackle the economic crisis. The economy has been struggling since the South seceded in 2011, taking with it 3/4 of the oil output and also depriving Khartoum of a crucial source of forex. And the Central Bank of Kenya has retained its benchmark lending rate at 9% for the fourth consecutive time, with inflation expected to remain within the target range. Year-on-year, inflation was down to 4.14% in February from 4.7% a month earlier, staying within the government's preferred band of 2.5 to 7.5%. But in January, the bank had projected an economic expansion of 6.3%, up from an estimated 6.1% in 2018, boosted by an expansion in agriculture and the services sector. The current account deficit was estimated to be 4.8% of gross domestic product this year, down from an estimated 4.9% of GDP last year due to lower food and machinery imports. Now let's shift attention to the domestic bourse. It seems as if the bears are still holding sway at the equities market here in Nigeria. Let's quickly cross over to our correspondent Temple Ashaju, who's standing by to talk us through on some of the developments. Hello, Temple. We've seen 3 straight negative trading sessions this week. There have been 3 straight negative trading sessions this week, with yesterday's loss being the largest in about 2 weeks. Is the sell pressure easing off at this time?
Well, it looks like it's easing off because we are seeing a serious fight for dominance now between the bulls and the bears. Because in early trades, the kind of negative sentiment we saw yesterday actually persisted until midday, when we then saw some gains in the market, helped by, of course, the banking sector. Wema Bank rose some 2.74%, and we've seen some huge volume on this particular company. We're really not sure. We were really not certain why we actually saw that. Some 1.7 billion shares of Wema Bank is actually out there right now, and it's the top traded security in the market. Of course, we know that it is earnings season, but I'm wondering what kind of earnings this particular company will be proposing or even declaring to its dividend at the end of the day to warrant that 1.7 billion shares. But we know that Wema Bank is one company that has some key investors that have also participated well in this election. So it might just be a new dawn for Wema Bank in terms of how they will play a significant role in governance going forward post May 2016. So perhaps some investors are taking position. But basically, the market is looking good, helped by the banking sector. We're up some 0.06%. We're up 0.01, then it moved to 0.02, and now it's 0.076 rather. I'm hoping that it will actually increase and go further, and we'll be able to have the market, at least for once this week, closing in the positive territory. Because again, the good news that the central bank launched this week with, which is the 50 basis point reduction in the MPR, is actually supposed to be something that should also help the market. Besides, we've also heard some analysis especially from the international community, saying that the MPR will actually go the way of Egypt, where the economy has actually started yielding some positive due to the growth that we've now seen in the local currency. So possibly this sort of news will also help to ease the whole negative sentiment that we've been seeing in the market, and we will be able to revamp the confidence of foreign and domestic investors going forward, Emmanuel.
Okay, Temple, we'll leave it at that. But when I see you, I'll find out if the bull you have pinned on your lapel actually contributed to helping the market to ease off some of the pressure.